Hello, guys. Welcome to Ambafx weekly Forex forecast. This week, last week was a big one, especially on Friday. It was a big day for US dollar. We saw US dollar rally after a very optic move, and then a a surprise data from the US unemployment data, unemployment news. That is the non-farm payroll. So the data was so shocking. Uh, None of us expected it, including you that is watching this video. You are not expected. You are not expecting that kind of report from the US dollar due to the rumors about US going to recession and all. But what may I say about that is that after the COVID-19, a lot of people are getting back to work and a lot of people are getting paid, and I think everything is getting normal. That's when we can see the unemployment rate reduced out of the USA. So we saw Euro USD decline, GBP USD decline, USD decline, and gold we saw it decline. And the minimum pips each of them did was, let's say, 150 to 200 pips. That's what they did last week. So this week, let's see what's going on this week. So let's check the calendar. Let's see what we'll be battling with this week, because last week is gone. So we have to focus on the future. Okay. Oh, this is the last week result. Okay. As you can see, from 3.6% to 3.40. It wasn't expected at all. And then we have the ISM PMI, which comes out after that at from 50 to 55.2. So that's what we saw right there last week. So this week, let's see how it's going to be in the fundamental aspect before we go to the technical, and before we check our entry, how we what kind of entry are we looking at, and then where we are going to enter our trades. So this week, I don't think there is much to bother about in the fundamental aspect this week, because everything is just okay. On Tuesday, we have the cash rate and the RBA rate statement from the Australian dollar. So from the Bank of Australia, and then the previous drop was 3.10, and the forecast is 3.35. That means that they are going for 25 basis point rate hike. So let's see how it goes right there. Apart from that, on Wednesday, FMC member Williams speak, so we don't have to be bothered about that. Thursday, we have the monetary policy report hearing from the pounds, that is the Bank of England. And on Friday, we have the pounds GDP, that is on Friday too, we have the unemployment change and the employment change and the unemployment rate out of the Canada. That is BOC, Bank of Canada. Right? So this week, I don't think there is nothing to bother about in terms of US dollar and most of the pairs, because we don't have, because last week there's a lot of volatility last week, up and down. Instead of most of us here, we are expecting the DSY to break the support, but it shocked everybody. It bounced back at that support that you are seeing right there. So let's say I go, maybe it will last or it will not last. So back to the DSY. So this is we are expecting it to break last week. That many of us were saying that it has break. After this okay. After this move right there, many of us were saying that it has broken the support level, it has broken it. Not only that, we still have some monster right there. Then it just give us a fake breakout, but not really a fake breakout, because assuming the unemployment rate didn't come out better than expected, we'll have seen a very sharp decline. Like the movement, because a lot of traders are ready to sell, like to compound the sell, assuming the unemployment didn't come out better than expected. If it didn't come out better than expected, let's say it comes out worse, let's say there is uptick in the unemployment rate, we might see the move coming to this level. Like it will move massively, because a lot of people are already waiting for the report to know maybe they are going to short USD or they are going to take their money away from the US. But as we saw last week, we saw that it comes out better than expected. So what are we expecting this week? I think we are expecting uh, the move to continue to the upside. That's what we are expecting this week. We are expecting US dollar strength to continue this week. And then if you ask me where I'm expecting it to reach, yeah. So either this side or this side. So what I'm expecting this week is for the DSY to hit this level or this level. We might then see a reversal from there. But first of all, this level of 104, and then or this level of 106. But we might not hit the level of 106 this week. We might just have some some ranging here, then to this level, then maybe next maybe a move to this particular level on DSY. So it depends on what's going to happen next week. This fundamental news this week that can bother in terms of the US dollar right there. So the first pair we are going to look at is let's look at gold. We saw a sharp decline on gold after the report of the NFP last week, and it's very surprising. On Thursday before Friday, we are expecting gold to continue the up movement from here. Like, okay, after testing this area, then we're expecting it to just keep on moving to the upside from here. But on Friday, after we saw a sharp decline to this particular area. So what I'm looking at right here is if I eliminate this line, so I'm looking at gold to do a, let's check the weekly time frame. So on the weekly time frame, we might use Fibonacci for our entry. So let's use Fibonacci retracement for the entry. Maybe we'll catch the entry right there. So here it's moved down. Okay, it moved down to this area. So if you check the daily time frame, okay, let's check the 4-hour time frame for our entry. So we might see the move to a 50% Fibonacci retracement level. Let's say we might see a pullback to this particular area. Then if we see a pullback to this particular area, then we'll do what? We'll sell from that area to 18.03. That's where we'll be taking our profits right there. Or to be on the safer side, you can shift your take profit to 18.400. As you can see, let's okay 18.300. But when the market opens, we might see a retracement from here, a retracement from this level back to the 50% of the weekly retracement level. Then we might see a rejection to 18.30. That's when I'm looking to take my trade. Is either 38.2 level, this is 38.2 level, or 50% Fibonacci retracement level. That's when I'm looking to take my short on gold. So if we see, and alternatively, if you did not see any retracement, if it comes to hit this particular support, then you can wait for the break of that support level, or maybe a rejection of that support level to know where it's going next. So the next one we are looking at is DBP USD. DBP USD too. Last week I think I dropped a signal that okay, if we saw, okay, this is where I dropped the signal. Okay, after seeing that okay, it's bounced back at this particular support level, which relates to the which goes in line with the what we call the trend line. So I dropped the signal that if this one closes bullish, then buy, because here you can see that we have break of this particular area, and then we have this retest of this particular demand level right there. So before the unemployment news is doing well, then when we now saw the unemployment news, that's when it break this particular support. So trade is all about winning and losing, so we move. So what we are looking at this week is continuation to the downside, and this is where we'll be looking to take our profit 18761. So what we are looking at right here is for it to retrace to this particular level, and then we can see the move to, we might see the move to 18.77. so still looking at US dollar strength this week, because there is no fundamental catalyst to go against the strength this week, so we should see the continuation of US dollar strength this week, unless there is an announcement, because you have to be vigilant. Any announcement can come at any time that might even weaken the dollar, but if there is no announcement, then you should just wait for a retracement and then enter sell position from that area. So Euro USD2, same thing on Euro USD2, but to be sincere, Euro is strong. If you check the Euro index, you see that Euro is strong, but I think US dollar is more strong. So here too, we might see a move to this level, because as you can see, we have a minor support level here. So you can respect the minor support level and come back to retest this particular area, and we might see a move to this particular level. So this is where I'm looking to take my trade. I'm looking to take my trade at this particular level. So we go for a short target here, and then you put the stop loss up there. So I'm looking at it to give us to this particular area or this particular area, then we should see rejection from there, and then to 1.06770. So the next one we want to check out is AUD USD. AUD USD to if you check the weekly time frame, as you can see, we have a decline at this particular resistance level. To respect the resistance level at this particular area in the weekly time frame. So we might see a retracement. Let's say if we use the Fibonacci retracement, we might actually use Fibonacci retracement for all our entry in most of the USD pairs. So you target maybe the 50%, or what we call the, as you can see, this is 50% retracement level. This is 50% retracement level. This is 38.2% retracement level. So we might see a retracement to either 38.2 or 50% retracement level, and a move to 0.6795. So if we take our first profit right there, then our second take profit might be at this particular area, as you can see. So as you can see, our second take profit might be at that particular area. And one thing I wanted to know on DBP USD is, let's go back to DBP USD. I think there is a formation of double top on DBP USD. If you zoom it closer, you'll see. So which will make it to form M after completing that kind of that movement. As you can see, we have the first one and then the second top, so which will make it form M to this particular neckline on the, so we just have to wait, maybe, okay, as I said earlier, you use Fibonacci retracement to know where you enter, and then uh, obviously this is when it's safe to exit this particular pair right there. It's safe to exit at the neckline because you don't know, maybe to break out or to continue to move to the upside right there. So depending on what happens next week. So after USD, you can see that the next pair we want to check is SND-USD. So SND-USD, we have break through this. We have break this particular consolidation to the downside, and then if you check it too, it looks like it's also forming what we call the double top. So here we should just be careful with the entry. All we need right now is where we are going to enter and then where we are going to exit. So exit might not actually be the problem because 0.62196 should be the exit at the SND USD, but the entry, it should be like this. So any retracement you see to the upside, we should give you an opportunity to look for a what, for a bearish setup. So we might see a bearish setup completely here, then we should see what we call a move to the what, a move to the downside. So actually this is what I'm hoping to see right there, maybe some movement to this particular area, then we'll see the decline from that particular area to 0.62196. So the next pair is US dollar card. As you can see, if you check the daily, if you check the weekly time frame, US dollar Canadian dollar is what we call the support level of the weekly time frame, which want to form what we call double bottom. So as you can see, a lot of them are forming double top, double bottom. As you can see, the double bottom is right there, the first one, the neckline, and the second bottom. So we should be looking for a push to the next neckline, which is 1.36. So I think we have a lot of setup, a lot of good setup, but the issue you guys will have is the entry, if you understand. So where you enter so as not to miss the big move. That's why I first use our Fibonacci retracement at that particular area right there, which means we might see a retracement before we go to the normal pair. But on US dollar card, we might not actually see a retracement because the weekly candle didn't close, or we didn't see a very long weekly candle close right there. It just closed as normal reversal candlestick. So if you check the daily candle close, you see that the daily candle close after these two reversal candle, then we saw a candle closes bullish beside it. So which means that, which tells us that this buy confirmation has been confirmed, but where we are going to enter is the issue. So we might see a just small retracement to this level and then a move to the neckline, which is 3.6. So that's it. We still have 200 and something pips to go to move to that particular level right there. So if you check this place, as you can see, we can see a movement to this place and then a move to this, and these are very, very big setup, and we should have 80% confidence on this particular setup right there, because there's a lot of things that confirm that okay, we should see this pair moving to that particular level right there. So then after the USD card, we have the US dollar Japanese yen. Checking the US dollar Japanese yen monthly time frame, what we can see right there too is that we have bounced off that particular support level right there. As you can see, we have support level here, and then if you see this last month candle, that yeah, that's January candle, it's closes what we call bullish. Hope you understand. So there is a weak rejection candle, which tells us that there's a lot of seller, there's a lot of buyers at this particular area waiting for it, and then we saw the weak rejection candle at that particular area. So using the weekly time frame, as you can see, we have bounced off that particular area, and then the trend line, as you can see, we have what we call break this trend line to the upside. So if we are on daily time frame, you see that we have break that particular trend line to the upside, which tells us that we can just see a small retracement of Monday. So we might actually wait for Monday candle close, or you might see a big Monday candle, or we have to wait for the next 2 4 hours candle before we can enter a buy position right there. That's the first take profit will be at 134033, and then the second take profit will be at 137. Yeah, 137. We should see the second take profit at this particular level, at this 137.506. That's what I'm looking at on. So any movement below this particular level, the buy has been invalidated. So the last one, okay, this is actually not the last one. Let's look at the weekly time frame of that particular pair right there. So if you check the AUDJPY, you will see that we are in an uptrend. If you let's use trend line to figure it out. Okay, as you can see, it's respect at this particular level. We have respect of the trend line there. It comes back to respect it, then we have respect of the trend line, which tells us that we are in an uptrend on AUDJPY. Then after this chart pattern move, we saw a breakout, and it comes back to what to retest that particular area. If you check the daily time frame, you see that is actually we tested that particular area, creating one form of a rejection candle here, which is doji like. And then if the Monday candle closes bullish, and then maybe Tuesday on to, then on Wednesday we might see that we might enter long position at that particular area. So first take profit should be at 94702. That's almost 300 and something, or 400 pips right there. That's almost 400 pips. And then second take profit at 9801. That's 800 pips right there. So that's all we say on AUDJPY. And then this is my outlook for this week. This is what I'm hoping to trade this week. And then you should be careful about your entry. We have the what we call this thing on our side. Most of the pairs we have like various confirmation to know that okay, this is where they are going, but your entry and your exit matters a lot. So if you are new to this channel, please click on the like button, subscribe, and don't let the comment section be dry. Please comment your opinion on the comment section. Let's hear what you have to say about each of these pair, and what's your opinion about how the market will behave next week. And let's hear you out, let's share ideas. So that's what